Hello, this is Brian Resney, President of Resney Wealth Management. I want to bring you this update today, as I do every other week, just to talk a little bit about the economy and the investment markets. You know, we've seen some volatility in the last 6 to 8 weeks. I've sent out a number of updates to our clients. I'm glad to say the majority of our clients are fairly level-headed. While nobody likes volatility, the majority of our clients realize it's a natural part of investing. Of course, we're well off the lows that we saw about a month ago, so things are moving in the right direction on the way back up. We had about a 10% correction, which I've been calling for the last 2.5 to 3 years, because we really haven't had a correction in most markets in the last 3.5 years. The economy keeps chugging along. Unemployment's looking good. The jobless claims numbers, housing permits, mortgage refinancing, all of the different things that come into play, generally speaking, look pretty darn good for the U.S. Not fast growth, but sustainable growth. While the Fed did not raise interest rates, which I firmly believe they should have, maybe they'll raise rates in October, November, December. We're going to watch and see. We continue to see the 10-year hover around 2.10%, plus or minus a tenth of a percent. I firmly believe if the economy continues on the track that it's on, the Fed will probably raise rates. We're starting to see some stabilization in the downside of equity prices on the emerging markets, which again is a positive, and we're starting to see a slight rebound in oil prices. Generally speaking, market corrections happen at least once a year, these 8 to 10% moves down. It doesn't mean you physically lost money unless you made the bad call to be emotional and to liquidate your overall investments. I can tell you that's not the majority of our clients. And I'm glad to say the majority of our clients are having a level head with this market volatility. Remember, whether you're invested in stocks, bonds, oil, gold, it doesn't matter. Everything's going to have some volatility. Your emotions, your gut reactions are not good ways to manage the risk in your portfolio. While again, nobody likes short-term volatility, it's the natural part of the process. Traditionally, and again, no guarantee to the future, the last quarter of the year traditionally is pretty darn good for most of the markets. I firmly believe that we're not seeing any recessionary indicators from all of our research within the U.S. I believe we'll probably end the year higher than we are today. I don't like to give predictions, but we're on the right path. I firmly believe as we get into 2016, earnings are going to be better than people anticipate for 2016. And I think year end, we're going to see better numbers on retail sales, sales in general, GDP growth, and earnings growth possibilities. So again, we like what we see. We don't like short-term volatility, but it's a natural part of the investment process. If you're a client of our firm and you have any questions, please call me. Let's discuss. If you're not a client of our firm, call us for a consultation. Maybe it's time you became a client. Make sure you have yourself a safe and profitable day.